Hi there, you're watching Your Trades with me, Shreyanti Singh, and with me is Snehi Shah. And over the next half an hour, we'll help you wind down and make sense of the trading session in today's trading session. And let's also take a look at what kind of moves that we saw today. Nifty Bank and the Sensex hit an all-time high for the second straight day. Quite the good moves coming in for all three of them. The upside momentum was maintained for all three, and when you look at the moves sectorally as well, you had media, energy as well as infra leading the gains. On the flip side, of course, there was metal and realty pack that failed to impress and were on the back foot, and even auto that was in the slow lane as well. Plenty of gainers. When you take a look at the list of gainers, you do have big boy Reliance that did some heavy lifting, contributing over 100 points to the up move. Some of the cement players also did well. So whether you look at an Ultratech cement or even Ramco cement or India Cements as well, all of these counters did pretty well in trade today. And from the banking space as well, there was also ICICI Bank that did rather well, along with Kotak Mahindra Bank as well. Now, in terms of auto players, the likes of M&M as well as Tata Motors remained on the back foot, like I mentioned. But can't say the same about the telecom sector though, because that space looked rather smart. So if you take a look at a Bharti Airtel, that held up quite well, and no surprises there really, because the company emerged as the largest bidder in the spectrum auction initiated by the Department of Telecommunications. It also concluded today. The auction concluded with the government mopping up rupees 11,300 crores in 7 rounds of the auction, and the spectrum offered was valued at around 96,000 odd crores, upwards of that as well. So that's the news coming in terms of the spectrum auctions, Nehi, but lots of other counters to keep an eye on, right?
Absolutely, lots of other stocks to watch out for. Like Shreyanti mentioned, some of the top buzzers. I also want to keep it going with that list. You had India Cements up 14.5%, very stellar and smart moves coming over there. CESE up 11%. Hitachi Energy continues to gain for a second trading day on the back of that order win that it saw yesterday. Another 11% uptick coming over there as well. Titagarh Rail 9%. Raymond has been a classic outperformer in the markets over the last 3 sessions in a row. It has been consistently gaining anywhere between 7 and 10%. Yet again today, 7.5% higher is where Raymond has closed. Garden Reach, well, the defense pack continues to be a buzz. IFL Finance, 361, Affle, Amber, Z Entertainment, Wellspun Corp, all of these stocks have been buzzing in today's trading session. On the flip side, we also had a whole list of losers today. CE Infosystems, like Shreyanti mentioned, on the back of that block deal was lower. Ratan India has closed lower by 3.5%. MCX, NMDC, Westlife has been lower, and real estate continues to languish for a second trading session, led down by Suntech Realty, Prestige, Macrotech. All of these 3 stocks, solid losses of 3% each coming in on each of those counters. But moving on, let's also talk about some more top news of the day. Then the Finance Ministry is evaluating a proposal for another PLI scheme on sectors such as chemicals, toys, footwear. So those stocks did pretty well today, and more to watch out for when it comes to this space. And lastly, let's also talk about 2 stocks that were a buzz up and away in today's trading session, and I'm talking about Areda as well as Hutco on the back of that potential government inclusion in the 54 EC of the Income Tax Act, which means that investors buying into the bonds of these companies will be exempt from capital gains. So smart moves coming in on both of those counters as well. And well, let's also talk about another stock in focus today, that was IRCTC. Now that is on track to launch a super app, and we'll have more details in the rest of the show also coming on this. But well, yes, that was all the top news that we were tracking for you today. Let me take it across to our technical guest for today, and all right, before we do that, Shreyanti, I believe we have more on our radar as of now.
Absolutely. So from reserved railway ticket bookings to facilitating couriers, IRCTC, like you mentioned, is all set to launch a new avatar of its mobile app to bring all the services under one roof. Moreover, it will also be offering freight services to customers, which could lead to adding major e-commerce players as clients as well. Sources tell us that IRCTC's super app is included in the 100-day action plan of the Indian Railways. In fact, Sameer Dikshit is standing by with more details. Sameer, tell us about this.
Railways is planning to come up with a super app that will provide all these services through a single platform, whether it be to the passenger side or to the freight side. This super app will be termed as IRCTC app and will have two options. One, the passenger, and the other one, the freight. So if you are a passenger and if you are looking to avail the service, whether it be booking a reserved ticket or a unreserved ticket, even booking a meal when you're traveling on train, or booking a flight, a cab booking, a hotel booking, anything that will be provided through this IRCTC super app. Similarly, if you are a freight customer, if you want to book a parcel that to be transported to some other city, one unit of parcel can also be booked. So through this super app, you can avail all the services related to the freight side as well. Now, what IRCTC is looking to achieve through this super app, the first agenda or the first target is that IRCTC is looking to expand the customer base. As of now, of the total reserved ticket booking, approx 80% is done through the IRCTC app, but IRCTC or Railways is looking to expand the revenue with this super app. Secondly, the freight customers, the ministry or IRCTC is looking to attract new freight customers, expand the freight basket as well, and that will help to increase the revenue. So these are a couple of big targets that Railways is looking to achieve through this super app, but this app will be like a one-stop solution for all the railway needs. It is a part of Railway Ministry 100-day roadmap or the agenda, but to ensure that everything is put under the right boxes, this app can be rolled out by December. So this is for sure that this year itself, this super app will be rolled out. But yes, this super app will help to expand the user base and the revenue base for the railways.
All right, Samir, thanks so much for taking us through that. Big developments coming in on IRCTC, so we'll see how the stock is impacted, if at all, in tomorrow's trading session. But on that note, let me bring in the technical expertise on the show today, and that is Ruchit Jain, the lead research at 5paisa.com. Ruchit, hi, and thanks so much for taking the time out and joining us today. Well, yet another day of record highs for your benchmarks. You have Nifty, Nifty Bank, Sensex. On the flip side, small cap did well, but mid cap has been languishing. India VIX has cooled off cooled off by 2%. Tell us, what are you making of this momentum we are seeing in the markets? Is it all too much, all too soon? Do you see any sort of slowdown coming in for the rest of the week? And how does one approach levels going ahead?
Yeah, hi, very good afternoon. Well, there's no doubt about the trend for the market has been quite positive. Last couple of trading sessions, although we have seen some kind of profit booking in the broader markets where the mid cap and small cap indexes have not rallied that much compared to the Nifty in index, but this is mainly because of the sector rotations which have been going on. I think those stocks, some of the mid cap and the small cap names which have already seen a very sharp up move post their election results low. I think that's where some profit booking has been seen, but clearly a buying interest has been seen in the large cap names. If you look at the FIS data, then they have turned net buyers in last couple of weeks, where during their election results day in this series, their long short ratio was just around 13%. That has improved significantly, and they have more than 60% positions on the long side. So this clearly indicates the change in the biasness, the change in the what we can say the pattern, and the long formations where FIS is leading this markets higher now. Now, if last two trading sessions, the private sector banks as well as some of the other heavyweights such as Reliance Industries, these are some of the names which are witnessing good momentum. And in case if we look at the buying interest, then it's clearly seen in some of the sectors where there has been relative underperformance in last few months, such as private sector banks or Reliance Industries, or even if you take some of the IT heavyweights. I think that's where some relative underperformance was there, and because of that, the risk reward ratio has become quite favorable. So I don't think one should preempt any kind of reversals over here. Let there be signs or any kind of price-wise reversal patterns being formed. Until then, it's better to trade in the direction of the trend. The levels that would watch out for tomorrow being an expiry would be would be around 24,000. Where some call writing positions are there, and in case since heavyweights are leading this up move, if we see unwinding of this positions from the call writers, then the markets could even rally towards 24,130, which are the retracement levels of recent correction.
You mentioned the heavyweight Reliance, then we did see about like a 4% uptick coming in for Reliance as well. What are the kind of levels that you're looking at there as well? And other than that, what are the other picks that you have for our viewers?
Well, in fact, I have a couple of buy recommendations, and one of them is Reliance Industries itself. about 4 months of consolidation phase was there in Reliance Industries, where the 100 DMA supports were intact, and today the stock has given a breakout from its previous swing high resistance. If you look at the data of options, then there was significant call writing at 3000 strike, where unwinding has been seen today, and still I think decent amount of call writing positions are there outstanding. So because the stock has hit a new high, we could see further unwinding of those positions, which could lead further momentum in the Reliance Industries. One can go long with stock below 2950 for potential targets around 3170 in the near term. And Sun Pharma is the second name, which is looking quite positive from a risk reward ratio perspective. As I said, that those sectors or stocks which have not rallied and showed relative underperformance, that's where the risk reward ratio is becoming favorable now. So, this recent correction, post the recent correction, the stock is trading around its support. It's on the verge of a falling trendline breakout. I'm preempting that breakout a bit now. So one can go long over here as well with stop below 1460 for potential targets of 1600.
All right, Ruchit, thanks so much for taking us through that. Nifty heavyweights are on your radar, Reliance as well as Sun Pharma. But let's keep it going with the technicals then. And Shrishti joins us with her take on the breakout as well as breakdown stocks today. Shrishti, over to you.
Well, yes, we have spotted two counters. One is the first one is on the breakout side. Have a look at the JK Cement stock, because this particular counter and even the whole space has been buzzing quite today. And JK Cement specifically, it managed to break above its key resistance of 4,400 levels. If we see, then the stock has been facing some resistance around those levels. But in today's trading session, with an OI buildup of more than 15%, the stock managed to jump. And this is the first stock that we wish to highlight, breaking the resistance and now trading above its key moving averages after taking a support exactly at its 20-day moving average a couple of days back. So that is the first stock that we wish to highlight on the breakout side. But other than that, have a look at the breakdown candidate, that is Cipla. Why so? Because the stock did undergo a breakout in the recent while. You will see that the stock did break out above that 1500 odd resistance. It managed to move above, but for the past 6 days there has been consistent pressure on the stock of Cipla, and apart from that, it managed to face a rejection exactly from its 20-day moving average. Other than that, even the key resistance or the earlier support rather for the stock is now broken for Cipla, and that is why we are highlighting this counter on the breakdown candidate. So these are the two stocks on the back of the breakout as well as breakdown that we have spotted on technical front. Back to you.
All right, thanks Srishti for that roundup coming in. So those were your counters then, and let's move on and take a look at the banking space then, because that did quite well for itself. When you take a look at ICICI Bank, Axis Bank, or even a Kotak Mahindra Bank, did quite well really. We also caught up with Sanjay H. Parekh, who's the founder and CIO of Soham Asset Managers, and he talked to us about the space as well. Listen in to what he had to say.
38 to 40% of the index Nifty is financials. And with all, world over, whenever you've seen all these balance sheets being in place, the positive ripple effect is on banks. The largest PSU bank is at a net NPA of 0.3%. And having said that, seen that space now for 20 years, there was a 10-year period when they had to clean it up, But now the net NPAs are very, very low. And the good part is, even if they bottom, the credit cost will only gradually go up. So that is where, now the book value sanctity is established. The growth rate, even if it's 15 to 18%, and ROE from 16 to 18%. Yet, even if you don't take re-rating upwards, the earnings itself will give you the appreciation in financials. So that is where on the banking piece, we are positive. On the larger cap space, both in the private sector and public sector, where we are the largest PSU with us. All other non-financials also, very clearly the opportunity is very large. Be it broking, wealth managers, fund, AMCs, and then of course the financial infrastructure space. Of course, a lot of space, the valuation is not reasonable. Some of it is getting frothy, and hence you need to just balance where you get that growth at reasonable price. But we are very positive on the financial space overall.
All right, that's the word coming in from Sanjay Parekh. A word of caution coming in on financials, but nonetheless very optimistic views on that sector. But with that, we'll slip into a very short break on this edition of Your Trades. More on the trading session that was when we return. Hi there, welcome back. You're still watching Your Trades on ET now. Let's talk about a sector that was up and buzzing in today's trading session, and that was cement. Now, cement players are on a tear on the back of healthy demand and pricing. Sher Khan's Ronald Sioni believes that there are several candidates for inorganic growth in the industry, and he also listed out his preferred picks in the cement space. Let's go across and listen in to his views and the picks he likes from the cement space.
There are all the plenty of names which are doing the rounds in terms of all the smaller sized companies which could be potential acquisition targets, but at what price they get acquired, that would be a key consideration, because strong cash flows are expected from these large companies which would be getting deployed for organic or inorganic expansions. And if they get inorganic route, if they deploy this inorganic route, then they can capture the strong demand environment at a faster clip and improve the market share. Ultratech has really caught up on the valuation, but Sri Cement is yet to catch up on the valuation. There is still upside in terms of catching up with Ultratech. At one point of time, it used to trade premium to Ultratech. But Ramco and Dalmia Pala, JK Lakshmi Cement are also good candidates, for getting an upward re-rating in terms of EV to EBITDA multiple. So,
Alright then, those were the top bets that Ronald had in the cement space, but let's move on then to the spectrum auction that was initiated by the Department of Telecommunications for telecom spectrum, and that has concluded today with the government mopping up rupees 11,300 crores in 7 rounds of auctions. When you take a look at what the offering value was around, it was valued at around 96,238 crores, and you did have Bharti Airtel that emerged as the largest bidder as well. Previous auctions in 2022 saw much higher participation in spectrum bids as well. We have ET Now's Sumit Chaturvedi joining in with more details.
Owing to muted demand, spectrum auctions have ended after one day and just few hours on the second day. They have received bids worth 11,000 crore rupees. Total over 10,000 megahertz spectrum was on offer for worth 96,000 crore rupees. However, due to muted demand, there would be it couldn't extend beyond 6 rounds. Bharti Airtel has emerged as the largest bidder. 800 to about 900 megahertz was much in demand. If you talk about last time, around 1.5 lakh crore rupees worth of spectrum was on offer, and Reliance Jio emerged as the largest bidder for around 88,000 crore rupees worth of spectrum bid by Reliance Jio. But this time, due to muted demand, it could only be wrapped up in just about 1 day and a few hours on the second day. Reasons are some for the muted demand, that there are not many new players in the market. Also, existing players are not ready to expand in a major way. That's another reason why there was a muted demand. But if you talk about this time, well, clearly Bharti Airtel emerged as the largest bidder, and spectrum auctions have ended on the second day itself, entering a few hours into the auction time.
All right, thanks for that, Sumit. Let's move on then, and shifting focus to a budget exclusive as we count down to the big budget this year. Sources tell ET now that the new PLI scheme may be in the pipeline. My colleague Prakash Priyadarshi has all of those details on what this potential new PLI scheme could cover. Prakash, take it away.
Yes, we are learning from our sources that the government is likely to announce some new PLI scheme in the forthcoming union budget. We are given to understand that the Ministry of Finance is considering various such proposals which have been prepared by the different ministries after wider consultation. Sources are informing that the new PLI scheme is likely to be announced for the steel sector, which is going to be second such PLI scheme, and for that Ministry of Steel has already done extensive groundwork. In fact, the consultation process has already been completed, and the products have already been identified going to be covered under the new scheme. In addition to that, sources are also informing that some new sectors are also going to be covered under the PLI scheme, and that include sectors like chemicals, toys and footwear as well. The industry has already made a strong case to launch a PLI scheme for these sectors, and we are given to understand that now Ministry of Finance is considering this proposal. In addition to that, sources are also informing that the fund allocation under existing PLI scheme is likely to be increased as well. We are given to understand that the fund allocation could be increased by more than 30% based on demand. As you are aware that the government has already launched PLI scheme for 14 sector. And now we have been informed that some other sectors are being considered, and that could be announced in the budget. That will help government to increase domestic manufacturing capabilities. Along with that, that will also help to generate more employment going forward.
For that update coming in on the potential PLI fillip that might be in the pipeline. But let's move over and take a look at the block deal action that we saw today. So you had three counters, Vedanta, C, Infosystems, as well as Hindustan Foods reacting to some of the block deal action. Let's go across to my colleague Sharad, who's standing by with more details.
Well, yes, one of the first block deals in the day was from Vedanta. Roughly 2.5% of equity shares changed hands, and the deal size was worth almost 4,000 odd crore rupees, and the promoter group is likely seller for this. And also Vedanta's arm Finsider International is likely to have sold the shares in this block today itself, and the street is expecting that we could see further more block deals in the coming week as well. We had actually stated this last week in our dealer segment as well about the Vedanta's block deals. The second stock in focus is C, Infosystems, MapMyIndia. Almost 1.13% of equity shares have exchanged hands, and the deal size is worth roughly 140 crore odd rupees. The promoter group is likely to be the seller as per the channel checks. And lastly is Hindustan Foods. A large amount of shares, roughly 11.1% of equity, has exchanged hands, and this deal is worth roughly 720 crore rupees, and the likely seller is expected to be the PE funds such as Westbridge, Sixth Sense, and other PE funds are expected to trim their stakes as well. So a lot of block deals are happening in Dalal Street, and we can see that today as well.
Right, the rally of block deals continues on D Street, and three stocks today are buzz on the back of that: C, Infosystems, Vedanta, as well as Hindustan Foods. Thanks, Raj, for taking us through that. But while we are talking about all the stocks that were abuzz, let me bring in my colleague Jain, who's standing by with a list of yet another group of stocks that were up and away in today's trading session. Jain, take it away.
Well, yes, so first stock is Stylum Industries. The company gained about 10% in today's trading session, and the main reason was Investec initiated a buying report with the target price of Rs 2,362. A different approach on marketing and distribution is something they believe what drove the earnings growth, and they see a EPS CAGR growing of about 11% from over two fiscal from FY 2024 to FY 2026. Next stock, VPRPL, gained about 5% in today's trading session. The company was awarded a contract by the Office of Superintending Engineering UP Jal Nigam Prayagraj with a total contract value of about 273 crores. Next up, Mazagon Dock Builders will be in focus as Department of Public Enterprises have awarded and approved the grant of Navratna status for the company. Next up, Gulshan Poly will be in focus. The company gained about 1.5% in today's trading session. The company has actually commenced an operations of ethanol at the 250 KLPD capacity grain-based ethanol plant situated in Assam. And lastly, Sangay Industries, Ambuja Cements and Mr. Ravi Sanghi, who are the promoters of the company, are actually looking to sell up to 90.92 lakh shares on their open offer. And for this, the non-retail will be opening on 26th of June. And for retail investors, it will be opening on 27th of June.
So those were the counters that make it to our list on account of news and updates. But with that, it's curtains down on this edition of Your Trades on ET Now. For me, Shreyansi Singh, Snehi Shah, as well as the entire team that put this show together, thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.